has a problem. The problem is depreciation. Because whatever assets we buy, they start losing value. They start wearing out and tearing out. In the course of using an item, like your laptop, the way it is right now, in the next 2-3 years, it's not going to be the same way. It's not going to function the same way. That is, it's losing its value, it's losing its function. So you can still maintain it because you can always update and do some maintenance on it. But it's not going to look the same. It's not going to be like when you first bought it. Do you understand? So that means whatever we call a non-current asset has the tendency of losing its value over time. So look at what I wrote here. Non-current assets are long-term assets that will be used by the business over a long period of time. So the business will use them for a long period of time. They are considered as capital expenditure. And it has a journal entry. Remember when we talked about capital expenditure, we said investment on non-current assets are capital expenditure. Investment on equipment, investment on machinery, investment on motor vehicle, they are long-term current assets. Yes or no? Great. So they have their own journal entry. So when you purchase a capital expenditure, when you purchase a non-current asset, 2 entries are involved. The double entry is we have the non-current assets, and we have either the trade payable, or the bank. Here I'm talking about how we make our payment. Because whenever you buy that asset, it's either you make a payment or you buy it on credit. Yes or no? So if you buy it on credit, it becomes what? Trade payable. If you pay by check, it becomes what? Bank. So the 2 entries are this. The non-current asset will be what? A debit balance. Thank you. And the trade payable or the bank will be what? Credit balance. So for every non-current asset purchased, the double entry in the journal will be non-current asset a debit, trade payable or bank a credit. We know why it is trade payable, right? It is trade payable because we bought on credit. And it is bank if we have to pay through our own account. Is it clear? Great. So that's about that. Now, said due to usage, the loss value is time. The loss value is called depreciation. So there's depreciation. So what you have to put into consideration in the cost of you buying that asset is that it will depreciate over time. So what is depreciation? Depreciation is the wear and tear of a non-current asset. What do I call it? A wear and tear of a non-current asset. So we can say depreciation. You can write it anyway, okay? It is the wear and tear of a non-current asset. I think it's clear here, right? Is it clear, please? Is it clear, please? Yes. Now, stop writing this. So, what would cause an asset to depreciate? That is causes of depreciation. So the first one, the condition of an asset getting was over a period of time. We used them, we didn't buy them for keep. We bought them for using, yes or no? So in the course of using them, please sit down. In the course of using them, they start wearing out, they start tearing out. So over a period of time, assets will lose its shape. Assets will get lost. Do we get it? That's about the condition of an asset getting lost. So it's not going to be the same way we bought it from 5 years ago. Even a car, if you buy a car right now, the way it is right now, it's not going to be the same in the next 4 or 5 years. Yes or no? Is it clear the condition here? The second one, technical obsolescence. This is a situation whereby an asset becomes outdated. Assets become outdated. That's another part. So the assets of before now they were not laptops. We have the PC, the computer system, right? But these days there are laptops. After laptops, there are iPads, and a lot of technology has taken place. So there's technological improvement, advancement in these non-current assets. So as a result of that, those ones we bought 10 years ago become out of date. Do we get it? Those of the previous years becomes out of date. So that is technical obsolescence. Is Is it clear? So that means depreciation also. The first depreciation is about what? The wearing out and tearing out of the non-current assets due to how we use them. The second one is technical obsolescence, which means that assets with time they become outdated. New ones are coming up due to what? Technological advancement or technological improvement. Is it clear? Is it clear, please? The third reason why we have depreciation is reduction of natural resources. These resources causing less production of such assets. Over time, the resources we use for those assets will be used up. We won't have them anymore. So it becomes difficult for us to continue using such items because we don't have replacement for them. So, if this laptop gets spoiled now, we might not have what we can use to maintain it because it's from the old years, it's from some decades back. Do you understand? So the resources you use making those items then, you might not find their spare anymore. Do we understand? So not finding their spare makes the assets to become what? Depreciated. Because you cannot replace them easily. Do we get it? Assets of 20, 30 years ago, they might not be useful this time because you cannot replace their spare parts. You cannot find their spare parts. Is it clear? The fourth one, the passage of time in the case of leasing, like the house, the building. Over time, they get depreciated because the buildings are not going to be like the ways they are right now. Some buildings built some 20 years ago will look old this time, yes or no? So they don't have the trend, they don't have the latest design, the latest structure. So you see that depreciated. Remember, land does not depreciate, land appreciates. But the building on land will depreciate over time. Because through the passage of time, they look old. Their latest designs, their latest structure. So when you compare the latest structure with those that were built some 20, 30 years ago, you see that they are not the same. So they've depreciated. Do you understand? In terms of the structure, in terms of the design. Why do we charge depreciation? We've talked about depreciation, we've talked about non-current assets, which are assets that we use over a long period of time by the business. Now, as a firm, we already know that our non-current assets will depreciate. What do we have to do? We have to charge depreciation. Up to now, do you have any question? No. You have a question? Okay. So, reasons for charging depreciation. Number one, applying the accrual concept. Say that the revenue of a business should be matched with the expenditure. So why do we charge depreciation? We have to remember, according to the international accounting standards, we have to follow through the accounting concepts, yes or no? We have to follow through the accounting concepts, yes or no? Yes. Just let it up. We have to follow the accounting concepts. Because we have to follow the accounting concepts, what happens? We have to think about accrual matching concept, which says that the revenue of this accounting year must be matched with the expenditure. If not, we will be overstating our profits. If you don't match the revenue with the expenditure, your profit will be overstated. Do we get it? So as a result of that, if we have to consider depreciation, we consider depreciation as an expenses for the business. Yes or no? Is depreciation an expenses for the business or not?
Yes.
It is. Because in the course of you making that production, you are using the asset. So in time, over time, the asset will depreciate. So depreciation is part of the expenses of the business. So it has to be matched with the revenue of the business for that accounting year. That's the first reason why we charge depreciation. The second one, it allows users of account to compare the performance of the business over different accounting periods. When you buy an asset right now, you're going to use it for this accounting year. So in the course of using it for this accounting year, next year, the asset will still be used. In years to come, the asset will still be used, but their functioning would not be the same as when you bought it, yes or no. So when you don't charge depreciation, it will not allow you to understand the amount spent to maintain the assets. Because over time, you have to do some maintenance on the asset. You wouldn't be able to calculate it, the amount of you spent on maintenance if you do not charge depreciation. So it becomes difficult for accounting users to analyze or to juxtapose between 2019 and still the same, but their functioning will not be the same. The way it functions from 2 years ago is not going to be the same. It's going to function this year or next year or years to come. So if you don't charge depreciation on your assets, you might be overstating your profit at the beginning of the purchase and understating your profit over time when you continue to use the asset. Because over time when you continue to use the asset, you would have been making maintenance on the asset. Do we understand? Is it clear? So let's note, depreciation is a non-cash accounting transaction. In the course of depreciation,